And we're live.
All right, welcome back to another episode of the Weekly. I'm Graham Stone, joined by Bitcoin.com news gigabrain David Sensel. Good morning, sir.
Hello, how are you doing? How was your weekend of monitoring the situation, Graham Stone?
Stressful.
Yeah,
Anxiety levels through the roof.
yeah, definitely. Um, did you see my newsletter cover for the weekend?
Oh, I haven't read it yet.
I really liked my newsletter cover. I thought it captured the kind of the feeling of monitoring the situation all week. So
Explain
maybe
it.
you'll. Oh, it's just that it's that meme of the Wojak who's got like the cap on and he's smoking and dark circles under his eyes. And then
Yep.
in the background is like a dimly lit room with six monitors of like stocks going down, inflation going up, uh, missiles being launched, drone attacks, and then his desk is just like covered in energy drink cans and fast food wrappers and stuff.
Yeah, that pretty much
So
explains it.
yeah, right. I was listening to some other podcasts, and everybody was saying it's like, yeah, it's been a really long week, hasn't it? And I definitely that resonated with me 100%.
All right, so oil prices jumped to $115 a barrel over the weekend on Hyperliquid as the Middle East conflict and the sudden production cuts from Kuwait and the UAE rattled energy markets. So, as of course, this spike on Hyperliquid uh, unfolded while the traditional commodity exchanges were closed, giving crypto based traders a chance to react first to the escalating geopolitical tensions tied to the US Israel conflict with Iran and the mounting disruptions near the Strait of Hormuz. So, crypto traders flooded Hyperliquid as the geopolitical headlines intensified. They pushed open interest on oil perpetuals past $50 million at times, and they sent daily trading volumes above 100 million during the peak activity. When the traditional futures markets reopen here in another 8 hours or so, prices could very well drift back towards levels supported by the physical supply and demand, but there's a possibility that those price spikes seen over the weekend stick. And as we've discussed, David, this trading action seen on perps dexes, decentralized perps dexes, is offering a glimpse into how quickly markets can react now when geopolitical risk collides with this always on trading infrastructure.
Yeah, I wrote about this a lot in the newsletter, obviously last week, um, because this conflict broke out going into the weekend, last weekend, and Hyperliquid uh, and Bitcoin in particular were the kind of the two places for everybody, not just in crypto, to express their opinions or hedge themselves over last weekend, right? And so you saw a massive spike in volume on Hyperliquid. You saw movements in Bitcoin that preceded the movements on last Monday. Um, and it was interesting to see the reaction. You had people on crypto Twitter both be excited about this, like, look, this is the future of finance, right? Hyperliquid is. Oh yeah, by the way, also Bloomberg last last weekend, not this weekend just passed, but the weekend before that, when the conflict broke out, Bloomberg over the weekend was citing Hyperliquid in their market sentiment analysis over the weekend, which is I think is maybe the first time that's happened. So they were talking about oil and what they thought oil would do come Monday morning, and to the basis of their thoughts were from the oil contracts, I guess, on Hyperliquid, which is again, it just shows you that we're kind of entering this kind of new era where it's no longer just for crypto. It really isn't. It's now for everyone, and it's being used by everybody.
Yeah, macro moves now being played out on the decentralized exchanges.
Now, the downside to this, which I thought this was interesting, again, I also mentioned this in my newsletter, was right now, Hyperliquid and then crypto, like digital assets, are really the only way people in all markets can express their opinion, or go risk off during these now kind of standard weekend moves, right? I think governments have realized the best time to do any kind of market shaking events is on Friday night or Friday afternoon after U.S. hours have closed, because it gives time for the news to digest, and then by Monday the reaction is a little more measured usually. So then all of that kind of volatility that happens, is expressed through digital assets, and this is perhaps not a good thing for Bitcoin and crypto, right? Because of all
Well,
that.
yeah, in the past, the expression has always just been through the marquee crypto assets like Bitcoin. Now, with these uh, perp dexes with derivatives um, products for commodities like oil, you can express it your whatever your macro view is on the asset itself, not just at like on the proxy Bitcoin or Ethereum. So arguably, it's the Bitcoin reactions to the way that Bitcoin has always reacted to these geopolitical events first may now be muted because there's other ways people can express it in the purpose dexes.
That's true, except again, they're not as liquid enough really yet, and so Bitcoin often becomes kind of this volatility absorber, you could say. Again, I just thought it was an interesting um, counterpoint to the prevailing narrative that this is like an unmitigated good for Bitcoin and crypto. So it's a small point. Small point. I would like to just speak a little bit about like, I'm going to put on my monitoring the situation hat here, and speak way outside of my expertise, Graham, if you will. So, oil, right? This thing about oil, we're all concerned about it. The price of oil has skyrocketed in the past like 30, 40 days from below 60 up to 100 plus.
Yeah,
Pretty,
currently trading at $117.
yeah, pretty wild. Um, and you have the two benchmarks, right? You have WTI and you have Brent. WTI is the U.S. based uh, kind of version of the price, and the Brent is more of a international Europe, Middle East, Asia um, version of the price. Um, Often, what happens when there's conflict, especially in Europe and the Middle East, is um, Brent will trade at a premium to WTI. It's just because it's maybe a little harder to get, because the theater of conflict is in Europe or Middle East or Asia, and that makes sense, right? It'd be a little harder to get to those resources, and that had been happening up until I just saw a post this morning. I don't know if it's still happening, but um, it looks like because of this issue with the Strait of Hormuz, that um, specifically Asian governments, Asian market participants, are now trying to gobble up WTI because their access to the Brent oil is going to be severely impaired. At least they're planning for that. And so you're having a situation now which is not so normal, where um, WTI was higher than Brent, and then now it's completely flipped over, and Brent is higher than WTI. Sorry. I messed that up. Sorry. Brent was higher than WTI, right? The European International Version was higher than WTI, and then it's now flipped the other way around um, because of the Strait of Hormuz problems, and this is apparently some of the oil people I follow. a kind of more dangerous, or it sets up a more risky situation, because it means that some of these sophisticated players are um, they're predicting impairment for 2 to 4 to 6 weeks, right? And this kind of move doesn't usually happen unless they think that there's a decent chance that it'll be hard to get oil from the Middle East. So that's not looking good for the price
Okay.
of oil.
Right. Now, what does the price of oil, like, how does that affect I mean, we're Bitcoin focused
Yeah,
podcast here. What are the permutations, right? So the price of oil goes up. I think that means the inflation is likely to spike, and therefore that means it's less likely that there will be rate cuts, which therefore, according to traditional wisdom at least, or historical precedent, means that risk assets, aka Bitcoin, are likely to underperform. Right? Rate cuts. If there are less rate cuts, there is more risk off, and
yeah,
Bitcoin does underperforms.
yeah. Right, exactly. So I mean, we have this story from Arthur Hayes. He said last week that I guess in a piece he argued that a continuing conflict between the U.S., Israel, and Iran could end up being bullish for Bitcoin, because he thinks the Federal Reserve might respond by printing money. Um, and I think what you're laying out, Graham, is the counter argument to Arthur Hayes, right? He says that major geopolitical conflicts often lead to easier monetary policy. There is some history of this, where the Fed cuts interest rates or injects liquidity into the system to keep everything going. Government spending increases to support the war effort. This does make sense, and there is some historical data to support this. He points to the Gulf War and post 9/11 as examples of this happening. However, just as you said, Graham, um, oil spiking this hard, inflation being one of the kind of the key things that this Fed has been laser focused on since, right, since post COVID. This is the inflation is like the big boogeyman, and this will definitely increase inflation. And you've already seen this with like prediction markets and the what's it called, the interest rate. I forgot the name of it, but they basically the interest rate markets. July, was it June? The June contract was in favor of rate cuts. That has now dropped to about 50-50. I bet it'll continue to drop here on out. And so now the 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 next most likely target for a Fed cut is September, right? Which is a long time from now. And to add to this, Graham, what you're also seeing is this conflict is is you're seeing finally the dollar start to rally from this conflict, right? People, big funds, everybody gets a little worried. All these mega institutional um, investors with lots of money, they start to get a little worried. They de-risk out of emerging markets, out of these other local currencies. They go to cash. They go to dollars. Dollars starting to catch a bid. Everyone's been short dollars for like the past 12 to 18 months. This is only going to strengthen the dollar. Dollar going up is usually bad for risk assets, and traditionally Bitcoin as well. It also makes liquidity scarcer, right? A more expensive dollar means there's less dollars usually, and so liquidity tightens. This is not good for risk assets. This is not good for Bitcoin.
Okay,
So
so several things aligning here, it seems, against Bitcoin performance, at least in the medium term here. Um, Perhaps on the other side, the argument would be, and people have been pointing this out, is this increased geopolitical uncertainty, conflict is something that is often pointed to as a reason to hold Bitcoin. Now, the fact is that Bitcoin hasn't performed as that sort of risk off hedge, I guess, really ever. But if there's always that possibility that the narrative will shift.
Yeah, definitely. I personally don't think that's likely to happen. I don't know about you, but I think that we've been shown that that's not true for the past what 12 months while gold has gone up bigly. I don't know why Bitcoin would start acting as a hedge right now. However, that being said, have you seen what's been happening? Apparently, there's so much misinformation, Graham. I know we're about to talk about this, but it's just a sea of misinformation right now. But
Yep.
apparently, right now in Dubai, there are a lot of people who have moved to Dubai. A lot of very wealthy people who have moved to Dubai in the past, whatever, how many, 4 or 5 years, and they're trying to get out now, right? At least for the short term, and they're having trouble too. They're trouble getting out because of the war and the airport situation. They're trying to get rid of their gold apparently, and they can't, right? Because if you have to sell physical gold, someone has to buy it. Okay, and if you buy physical gold, you have to like either keep it right there or transport it somewhere else in order to to transact with it. Shipping is severely impaired right now in Dubai or in the region. People are trying to leave, and so they're trying to sell a lot of gold, but they can't. But there's not a lot of buyers, or there's not enough local buying right now, and so you're maybe seeing, I think, a great example of a huge difference between Bitcoin and gold, which is the ability to because Bitcoin is not this like physical thing. It's not impaired by physical conflicts, and so
Yeah.
the trade and the transfer can happen regardless.
So potentially hard lessons being learned here, as to like what the use case of Bitcoin, like what Bitcoiners know has been the use case of it for a long time. Potentially, gold holders now learning that hard lesson, and maybe it sets things up for a new narrative.
Yeah. I could definitely see that. I still think the macro will take over any of these kind of smaller narratives, like the one I just outlined. Um,
Yep.
but yeah, just got to continue monitoring the situation. Shall we talk about all the misinformation, the AI slop, the slop
Yeah,
apocalypse?
it's rampant. I mean, you look on X and one post, Iran is completely dominating the conflict. Everyone, all of the like Gulf region nations are in ruin, and the U.S. is like aircraft carriers are getting blown up, uh, and it's just total domination by Iran. And then the next post is the complete opposite of that. That's what I've noticed, at least.
Yeah, I keep seeing posts where like you'll see something from a legitimate source, like missiles have hit, I don't know, Tehran or Tel Aviv or Dubai. And you're like, oh shit, and then beneath it there'll be like 2 or 3 videos of showing these hits, and they look ridiculous and devastating. And then you have to check the comments, like that's not that's not real. This is 10 years ago. This is 30 years ago. This is AI. This is not what the attack looks like. It hit outside the city or something like that, right? And then you'll see a post beneath that. It'll be like all these people saying that, you know, pick your city has been attacked. This is what it really looks like. And it just shows like a calm crowd of people walking around going about their daily life. And then you look at the comments, it's like, this is not a this video is from 2019. This is this is like 5 years before the conflict. This is AI. This is not real. It's like
Yeah, it's
I,
really hard to tell what's going on. I mean, it always is when there's war, the fog of war. But now it's just like happens in real time. Like uh, you see extremely contrasting versions of reality right next to each other, and the result is you're just like, I have no idea
exactly.
what the actual situation is.
Yeah. And so to their credit,
Maybe the
X.
markets are the best source of truth there.
Yeah, I mean the thing is though, they when you're Graham, if you are properly monitoring the situation, you got to have like 10 dashboards up. You need like up to date, second by second indications of what's happening.
Yeah.
Markets are too slow. But I mean, so to X credit though, right? They at some point last week, when was it? Was it like Thursday, Friday? I can't remember. They instituted a new policy, obviously in response to just this like deluge of misinformation, right? Um, and so Nikita Beer, am I saying that last name right? Nikita, I
Sounds
only
right.
know him. Yeah, the X's head of product. He said creators who post AI generated war footage without disclosure will face a 90-day suspension from revenue sharing programs. Repeat violations result in a permanent ban. And enforcement will be through community notes, crowdsourcing, fact checking systems, as well as metadata and signals embedded in generative AI tools. I think this is a much needed thing. I think this is just the start, to be honest. I think this there's going to be there needs to be a lot more work on this, so that we can get to a better base level. I remember maybe during COVID, I think X was so useful, was really, really, really useful. And the level of just misinformation and stuff was still there, but it was much, 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 much less. And you could get a good read on the situation well before it showed up in the mainstream media. Now it's almost like you're just waiting to see if facts are checked by the mainstream media because you just have no idea what's legitimate or not.
Yep.
Yeah,
Strange times.
very strange. Uh
All right,
oh.
let's switch
Wait a
gears a little
second.
bit and do.
Hold on, hold on, hold
Go
on.
ahead.
I just got someone in our X chat just yelled at me that I'm not monitoring the situation, and I'd like to reassure you, sir, that I am. I'm monitoring the situation. Anyway, please proceed.
All right. Let's switch gears a little bit and talk about some developments in the AI X crypto space. So, there have been over the last week or so a torrent of crypto projects, products, centralized exchanges, data products, all scrambling to integrate some form of AI agent friendly infrastructure, I guess you could call it. Um, at the heart of this, of course, is the explosion of Openclaw, the open source agent framework, which now has 250,000 GitHub stars. So, and the so-called X402 payments framework and the modular capability packages, MCPs, on-chain identity systems, all of these are emerging as sort of the agent economy infrastructure. Now, several crypto platforms are rolling out tools that basically make it possible or easier for autonomous agents to interact with the platform. So Binance released a suite of AI agent skills that allow agents to query blockchain data, analyze token security, track market rankings, and execute trades. I think there was a post from CZ that said, let your agents trade while you eat and sleep, something to that effect. OKX added agent integrations through its on-chain OS framework, so agents can manage wallets, initiate payments, and access market data. Crypto.com introduced an agent key API system with safeguards like spending limits and permission controls, so their users can deploy AI trading bots safely. It's not just the centralized players. PancakeSwap on the DEX front launched PancakeSwap AI, which allows agents to swap tokens, manage liquidity, and run yield farming strategies automatically. Uniswap released structured agent skills that, again, let the AI systems interact directly with its core trading functions. Then on the data and analytics front, you have CoinMarketCap launching real-time market data for AI agents. Both Nansen and Dune Analytics introduced interfaces that allow agents to query blockchain data and run analytics autonomously across dozens of blockchains. And it goes on and on. There's even Circle, of course. I think we mentioned this last week. Circle introduced nano payments, enabling agents to transactions as small as 1/1,000,000th of a dollar for automated microservices between agents. And then there is the so-called Agent Transaction Protocol, ATXP, which was launched with backing from Stripe, Polygon Labs, and a division of Samsung called Samsung Next. And that aims to enable fully automated digital commerce. Then you have wallets like Phantom and BitGet Wallet adding integrations that let agents monitor markets, manage funds, and again, execute trades. You even have some projects going further, like letting agents launch tokens, run apps, or operate businesses autonomously. So basically, anyone who can in the crypto space is scrambling to make their platforms sort of agent friendly.
Yeah. You know what this reminds me of, Graham? Do you remember when you could add the word blockchain to your to your company name, and it would like 5x, right? You remember that
Yeah,
iced tea company in
yeah,
2017 that added
Long Island
blockchain?
blockchain.
Yeah, yeah, yeah.
Yeah.
Well, let me take a step back. I'll do a little mini interview with you, Graham, because you recently got on. You got swept up. We're not swept up. Let's say you're in the
FOMO, I think, would
vanguard.
be the word.
You're in the vanguard. No, I'm gonna be no. Let's be positive. You're in the vanguard of this. You bought your required Mac Mini, right? Your
I got
standard
my
your
Mac
issued.
Mini just before
You
they
got your
all
man.
sold out.
Well, just when they all sold out, you got it, and you have your Openclaw slave up and running. I just want to
Yeah.
know, like, what is the is it all hype? How useful is it? What is your true opinion on this thus far?
Okay. Well, huge caveat that I've just barely scratched the surface, but here's what I got cold feet. All right, because my initial plan was to try to have my Openclaw agent or swarm of agents basically do some mundane tasks that are rather time consuming, such as like download a video that we're going to post on our social channels from Drive, upload it to all the different platforms that we're posting on, get the relevant copy to go with that video, post that. Right now, this is great in theory, right? And I think we will eventually get to this stage. The problem is, right? Uh, it's dangerous because you have to do this. You have to give that agent control over like all of our social channels, and there's been many notes of like security breaches. It's unclear,
Yeah,
like a lot of like the skills that these agents have. There may be like back doors. So basically, I started playing around with it, tested it, and for that use case at least, I got cold feet and unplugged it and turned off and revoked access. And I'm gonna revisit that. I don't know when, but that whatever. I think that's just like a perhaps me choosing the wrong use case for what the state of the technology is right now. It's experimental. You shouldn't be using it for that, at least for like a business like Bitcoin.com where it's like kind of high stakes. We don't want somebody uh,
Deleting all the content on our feed, or making
yeah, or
like
posting Nazi shit or whatever. Yeah.
yeah, all that kind of crazy.
We don't want that happening. So it's too risky. So anyway, I'm sure there are other use cases that and so I'm going to keep experimenting and playing around with it. But I just chose that. That was a bad decision as a place to start, I would say.
Okay, but here's what I'm trying to get at though. So you went through this long laundry list of companies: Binance, OKX, Crypto.com, PancakeSwap, Uniswap, CoinMarketCap, Nansen, Dune Analytics. Is this needed? All this AI crap? I mean, obviously you can tell it's a leading question because I use the word crap. But do you think it's actually useful? Is it? Do you think it's helpful in any way?
Um, I think yes. I think
Okay.
that eventually, yeah. If you could trust your agent to be trading, then isn't that awesome? But the question is, will it ever get to that state where you can actually just like, hey, agent, make me money.
Yeah, but
Uh,
no,
come
but
back
so
to me when I'm rich.
but but I talked about this. I had an interview with three people in Hong Kong, um,
No
and
mistakes.
we talked all about AI. And one of the questions was, what happens when everyone has AI and
Yeah,
everyone has
exactly.
AI traders, and everyone says
Yeah,
to the AI trader, "Make me money." In a
yeah,
like kind of in a zero sum game of trading, right? What
yeah,
happens
exactly.
then, right?
Yeah,
Um,
it's like the current algorithmic trading, but times 100, right? So right now you see like pretty extreme volatility in markets because the algo that everyone like trips and it's like, oh, this means sell, and everyone's on the same algo, so everyone sells,
yeah,
and that's just amplified by this. But so it'll just be like just like it is now. I think there will be um, just like there are traders. Some traders are better than others. Some agents will be better than others. The ones with the right data, I guess, and the right strategy. And so it's just still going to. I don't think it's going to be any different in the end.
yeah. Yeah. Okay. Well, I mean, again, I use AI every day. I don't use it as much as you and some others in the company, and I'm finally going to start using Claude Code and all that kind of glorious stuff. Probably this week, I guess. But just in my personal experience thus far, because I also got scared and cold feet about was about 3 weeks ago. There was that super viral article saying like um, AI is here and it's completely going to change everything. And for the first time ever, it can make a project from 100% if you just say make me an app, and it makes the app perfectly. And then there
Yeah,
the
one
week
shot, no
the one
mistakes.
shot. Yeah, and then there was the the next week was Citrini's article, which went even more viral. Right, it's like 25 million views the last time I checked, and it was basically like AI is going to make everything better, and then everyone's going to lose money because AI is awesome, and you're going to die and be a slave. And that scared everybody to the point where you had government officials and Fed governors cite the Citrini article, right? Like that's crazy. Um, so then I'm doing it, and it still can't write very well, right? Like I read a newsletter, I've tried to incorporate it in that, and it's dog crap. Anyway, I just feel like maybe all this AI stuff is still a bit of like window dressing at this point. I do think it'll get there someday. But just hearing all these companies tack on AI feels more like adding blockchain to their name than actually adding any real utility. Anyway, that's my
Yeah, everyone's scrambling to do something for sure.
yeah.
Speaking of scrambling to do something, I think our last story for the week here is a story that I don't think too many people are talking about, which is that Mastercard has made some moves with uh, Google, and they've co-developed this thing called verifiable intent. Now the details are a bit murky, but basically the idea is that it's a framework for uh, enabling AI agents to use the Mastercard network while still keeping all the guardrails, the chargebacks in place, right? So it's like um, the just a sec. There's a good summary here. So yeah, the they're using cryptographic techniques, not cryptocurrency or blockchain networks or anything, just some cryptographic techniques, and they're creating sort of a chain of records that can prove that the user who owns the account, the human, authorized the action, and then the agent followed those instructions. The merchant received a valid request, and this sort of stack of this forensic stack can be used to then later, if there's a dispute, right, to verify, you know, whether a chargeback is warranted. Now, what's interesting about this, I guess, is that there's one way you could look at it is like, okay, the Mastercard like the traditional payments network, they're scrambling also to make themselves relevant in the AI space. That's so you could just be like, it's a desperate play by them. You could look at it like that. You could also, I think, look at it like, well, wait a minute, actually, maybe agents will use traditional payments networks. The traditional payments networks are trying to make themselves accessible to agents. So the whole narrative that AI agents will, of course, just always use crypto is not guaranteed. And I think that assumption is sort of widely made in the crypto space. Yeah, of course, AI agents are going to use crypto. I would just say it's this little story here is evidence that that's not 100% guaranteed, or at least there may be a lane for AI agents to use the traditional payments networks.
Yeah, I mean, we talked about this before we went live, and I agree with that. That there will be a use case for them. I do think though that in a um, if and when agents get good enough that you can trust them with your credentials, Graham, and your money, then I really do believe that I think I heard this articulated last week that agents will become the intermediate for everything or most things that you do in your life. Um, One of the biggest lock-ins you see in all these different verticals, like Amazon, for example, is the fact that humans are kind of lazy, and they once they give their information, their credit card information, to set up the addresses and all that, that acts as a pretty significant moat, right? You'd rather just buy it on Amazon and pay a couple more dollars or whatever than go to some other website and then buy it for a couple dollars cheaper. I know that works with me. Like if I'm buying something and I'm like, oh, I'm going to buy a shirt, and then the shirt is on their own website, but it's also on Amazon for a couple dollars more. I'm like, yeah, whatever. Amazon, one click, yay! I don't have to do anything. Don't have to put in my credit card information, no address, just off we go.
Yeah,
Come on,
yeah,
that's what we're doing. Now, Citrini's article, he talks about this where agents will get good enough, they'll have your credentials, and they're not lazy. They don't care about that kind of effort at all, and they'll just go out to every nook and cranny and find the best deal possible, true, good, guaranteed deal, and they'll negotiate with an agent on the other side of that, and off you go. So when I'm like, I want this wool shirt, I tell my agent I want this shirt. They go off and they find it, right? Wherever it is. DoorDash is the same, right? Like, so you'll start to see a lot of these intermediates get kind of whittled away. Mastercard and Visa are also an intermediary, right? They're this payment processor, which is also kind of like a middleman. So a lot of their volume, I think, will be taken away by AI because why do you have to pay 2 to 3% to them, right? Now they could maybe try to be competitive, right? But then you're that 2 to 3% is going to get compressed down to kind of like nothing, to bare bones, right? And so for a lot of their volume, I think is going to be taken away. The one lane that I think they will retain though is like big purchases because then you do kind of want recourse, right? If you're going to spend, I don't know, 1,000, 2,000, 5,000 on a plane ticket or whatever, I probably would be comfortable with paying 1 to 2 to 3%, maybe, maybe not. But anyway, something like that, right? To have some kind of recourse in case there's something nefarious or malicious happens. So then you can call the company, the credit card company, and be like, "Hey, man, reverse that transaction. Here's why." That kind of thing. So I do
Yeah.
think they'll definitely have their place, and they're not going to die completely. But I can imagine a time in the not too distant future where I'm going to be talking to my agents, and they'll hold a lot of my money, and I won't have to deal with any of that. Oh, it's gonna be awesome. I hope.
Yeah, looking forward to that future as well. We just need to, yeah, improve the security and reliability of it, I
Yeah.
think.
Of
But
course, the problem
definitely
with this
that's the
is
way it's trending.
Graham, is I remember you and I talked about full self driving more than 10 years ago. I remember distinctly talking to you about
Yeah,
this.
yeah,
And 10 years ago, we're like, it's good. And I said this is it's going to happen in the next couple of years. We're not going to need to drive my car anymore. This is ridiculous. Driving is so stupid. Oh, here we are 10 years later. It's not,
yeah.
so
It's a tough nut to crack.
yeah.
All right, David, let's wrap it up there. I think we've covered the major stories of the week. Thanks for your insights as usual, and have a great week, everyone. We'll see you on Thursday for Token Narratives.